Welcome to the Overbook Asset Management Market Review.
So I'm just going to be sharing macro research from MRB Partners, Capital Economics, Alpine Macro, all incredibly well-respected independent research houses. It's really quite a privilege to be able to get their research. And it's generally a very positive message, even for the inflation hawks, MRB Partners. So we're going to be speaking, first of all, about the global outlook, particularly regional breakdowns. This is from MRB Partners. The unfolding upturn in global manufacturing and trade will be a positive for global earnings. They talk about a broadening global growth. The investment backdrop remains broadly supportive for global equities. Some signs of slowing growth in the US economy, although that's debatable, yet generally improving conditions outside the US. Any easing by the Federal Reserve and other central banks will help extend the economic cycle and provide support for corporate earnings. And this is when they talk about inflation, this is really when one needs to listen because they are the inflation hawks. Inflation will prove sticky near current levels, but we do not expect a rebound in inflation to be a major threat to equities anytime soon. So that's good. There is upside as global goods demand firms and global manufacturers rebuild depleted inventories. This coincides with stronger global trade growth. Growth momentum in both the euro area and China is improving and should soon revive in Japan. The global 12-month forward earnings momentum, i.e. the year-over-year growth rate, is now firmly in positive territory and rising. So we're talking now about Europe. So the ECB cut policy rates this month in line with expectations, and both core and headline CPI inflation have eroded markedly from the pandemic-related peaks. Most leading indicators of euro area economic growth are now improving and signal a pickup in real GDP growth ahead. Households are flush with excess savings. Consumer confidence has been recovering steadily. And now if we turn to China, the property market, the residential property market in China is still in a severe recession, unfortunately. So I'm just going to share with you what MRB have to say about that. Despite a flurry of measures aimed at supporting the housing market in China, hard data from the sector continues to indicate that the steep housing recession is not yet over. Housing sales continue to shrink and are some 25% lower than they were a year ago and 50% lower than their peak in 2021. The other parts of the economy, luckily, are holding strong. The Bank of Japan indicated late May in its policy meeting that Japan's economy was projected to continue growing at a pace above its potential. These expectations are based on solid labor market conditions, strong corporate profits, rising wages, a rebound in domestic consumption, and an improving global trade cycle. So GDP in Japan actually shrank quarter on quarter annualized in Q1, but expected to recover strongly in Q2. Now to the US market, the biggest economy in the world by a long way, and certainly the biggest equity market in the world. Research from Alpine Macro, the economic data remain consistent with real growth of 1 to 2%. US economic indicators are consistent with a perfect macro landing. The New York Fed staff nowcast predicts for Q2 annualized growth of 1.9%. Inflation is now behaving itself once again. Meanwhile, labor market indicators paint a clear picture of rising productivity, slowing wage growth, and a softening labor market. Unit labor cost inflation is declining. So that wage price spiral doesn't look like it will materialize. Equities will move higher if inflation declines, the economy avoids severe recession, and the Fed steadily cuts interest rates. We do have quite a bit of market concentration in the US. When I say quite a bit, that's quite an understatement. It's the highest market concentration since the dot-com boom. Everyone is on tenterhooks day to day with what's going to happen with the Nvidia share price. Seems to move the market just on its own. So let's see on market concentration. It may well decline as prospects for Fed easing draw closer. The rally could broaden to include defensive sectors and profitable, cheap, small cap shares. These segments have significantly underperformed since the Fed began to hike interest rates in March 2022. The bottom line, the cyclical equity bull market is intact. Big tech is not yet in a mania and remains a candidate for one. Small and mid-cap companies that offer some combination of quality and growth, but have not yet been bid up like the Mag 7 shares, are attractive. Then, capital economics, they continue to be very bullish. They believe that the AI-related bubble that is inflating in the stock market remains far smaller than the size of the bubble at the end of the dot-com mania. So there's scope for considerable expansion still.
Morning. I think the election has obviously been top of mind. And then just some feedback on our local portfolios. I think one or two things just to highlight is we've now had no load shedding for 3 months. So that should have a positive impact on sentiment and economic activity. And then just another positive thing I'll mention that came out on MoneyWeb during the week is that South Africa has reached its first budget surplus in 15 years. So yeah, it seems like there's been continued momentum in terms of fiscal consolidation from government side. So that's positive. Like I said, I think top of mind has been the elections, the formation of government of national unity, and then also the announcement of the recent cabinet. We get some very good research from SBG and a political analyst there called Simon Fremantle. And I'll just highlight some of the positive and negatives that from his report in terms of the government of national unity, and then also announcement of the cabinet. So the positives that they highlight is Senjum Tunu, which is appointed as Minister of Police. He used to be the Minister of Water and Sanitation. He replaces Becky Tele, which I think everybody knows wasn't the best minister around. And then the appointment of Baba Creasy as a Minister of Transport. She's highly regarded as a minister, and it seems like that's been a very positive announcement. The appointment of Park Stow in the Department of Trade and Industries replaces Ibrahim Patel. And then the last positive move that's been noted has been the appointment or the move of the energy portfolio to the electricity portfolio, which is run by Kgotsiento Ramakgopa, our electricity minister. And that energy department has been taken away from Gwede Mantashe, which used to be the Minister of Mineral Resources and Energy. And on the negatives that they've noted in the report was, again, the reappointment of Mr. Gwede Mantashe as Minister of Minerals and Petroleum, Gayton McKenzie as Sports and Arts and Culture Minister, and then Lady Nzimande, which was the Minister of Higher Education, is now moved to Science and Technology. And also noted as being not a very good appointment. But all in all, I think if we look at the reaction of the financial markets, have seen the new cabinet as net positive. And the expectation is that there would be some improvement in efficiencies, also because of the competition among ministers of different parties. Interesting fact that I've read on was commentary that I've also heard is that there's not a lot to be expected in terms of change of policies. Most of the policies will probably still be that of the ANC until there is sort of a debate or discussions where this government of national unity develops their own policies. And then in terms of our local portfolios year to date is at quite a nice run. The growth portfolio is up around 5.4%, the balance around 5%, defensive 3.1%, income portfolio 4.6%, and the global tracker, which is our local offshore ETF portfolio, up 3.18%. Just focusing on a few shares, as I said, the local market since the formation of the government of national unity had quite a nice run. Some of the shares that have done really well the last month in our local portfolios have been Standard Bank up 18%, Rabex up 18%, MTN 14%, Sasol 12%, and Investec 10%. And I think one just to highlight here is Rabex. It's a construction company, one of the few left on the JSE that we hold. We've been holding it for a long time. And yeah, year to date, it's up 56%. So it's been a very good positive contributor to the local portfolios.